Good morning, guys, and welcome to the Camp Financial Stock Market Update for October 14th. So before we get into the wider market yesterday and kind of go through the big drop at the beginning of the day that turned around and ended up pretty much being flat by the end of the day, I want to go into a couple of specific stocks that I've bought into over the last year and a half. One, I guess we'll start specifically with the one that was the most painful yesterday. It happens, and that would be Marriott Vacations Worldwide. Ticker symbol is VAC. So I bought about 30 shares, about 29 shares back in April of the stock, and I bought in at $67.95. So that gives you an idea where the starting point is. It's been very interesting. So the stock by the end of May was down to $60.60. So we're talking about a 12-13% decrease. So a pretty sizable loss. But then by the end of June, so then in June it paid a dividend. I reinvest all my dividends with this investing program. I use like 3 different systems that I've talked about in the past to invest with, and so this one is based on buying stocks when they're undervalued. But again, I try to reinvest all my dividends regardless of the system. That's the way I feel like you're going to come out ahead in the end, is by compounding your dividends. So with that said, the end of June I was pretty much back to even. Then by the end of August, I was up a little over 10%, probably about 12-13%. Then September, still up. And then before yesterday, we were pretty much right at even, up about 3% since the investment back in April 26th. So with that said, let me go take a look here at where it finished yesterday. I know at one point in time it was down between 10 and 11%. It was under. It actually dropped under $60 a share yesterday for a minute. Anyways, and so I'm checking out FinViz to see where it finished. Okay, so the closing price yesterday actually it rallied all the way back to $62.72. So beginning of the day was under 60 bucks and immediately started to rally back throughout the day, much like the broader stock market yesterday, and came back into a respectable level. Again, with their, so we got into it, looking at their PE ratios and looking at all of their financials and realizing that they've got some pretty good growth coming. Their forward price to earnings multiple makes sense. And again, the dividend, I guess, really wasn't super important on this, but I do like dividend paying stocks. So when you see a stock where at this point in time when I was buying it was 1.75%, but it's got a decent dividend, it's got good earnings growth, cash flow is good, a lot of things on it make sense. You know, made sense when I got into it. And really nothing's changed, right? So I mean, yesterday, yes, they did have a poor earnings report came out. That's what obviously tanked the stock, but not so much, you know, that it scares me that they're not going to be able to bounce back from that, you know, going forward. So I want to go through that, really just kind of as a reminder to everybody that is an investor, or you know, that may watch this video, is at different times you will feel pain in the market. As long as you understand why you bought a stock, where you expect the stock to go, and for me, pretty much every stock that I buy has a stop loss on it, so I have a set price where I'm going to get out if it would fall to that level. And you know, this one didn't drop all the way to my stop loss, so we're going to stay in, let it run, continue to collect the dividend, let it compound, you know, and you know, let the business do what it's supposed to do. You know, as Warren Buffett's always said, you know, he likes to buy things that are going to go up in value, that's going to pay him dividends, that's going to grow, you know, and that's where I feel that this stock is. So that is kind of a little rundown on that one. Now let me go over to another one that this stock is one that in my technical trading system, where I buy based on stock price of them and the moving averages. I've been a shareholder in Cap Reinsurance Holdings since March 25th of 2015. So what, a little over 18 months. The stock is pretty much, so since I've owned the stock, let me pull up my portfolio in Google Docs, where I've got them saved out there real quick. So in the time that I've owned the stock, again all the way back to March 25th of 2015, I bought in at $17.76 a share. It has reached a high of $19.51 a share at one point in time. So I still got, and again, this system has a stop loss in place. So pretty much, and so the current price on it, put that on there, is $18.21. So realistically, what we're looking at is a stock that really hasn't moved. It's up less than 3% as far as the actual stock price, but I'm up 15.5% on the stock just out of collecting those dividends. It's paid over $60 in dividends since it's paid me over $60 in dividends, I should say, on 22 shares over the last 18 months. So that's one that I'm going to continue to hold, let it run. It's got a stop price in place. If it would ever drop down to it, I would get out. If it would drop to the stop loss today, I would get out, and I'm going to lose 1.85%. That's I've already calculated, you know, where each of the stocks that I own, if they would crater out, what position that's going to leave me in on the stock. So a long term, you know, definitely playing the long term with Blue Cap, and it's been, you know, a good run for 18 months. I mean, there's not been at any point in time that it has scared me. So let's go now to the broader market. Let's take a look. So I must have missed right at the end of the day. It looks like the averages turned back around at about 3 o'clock and started to drop back off after the big sell-off to start the day. From about 10 o'clock on, it rallied again, and then at 3 o'clock we had the sell-off. S&P 500 down 0.3%, down 0.25%. Utility sector performed well. I see a lot of green in there, a lot of green in the healthcare sector. Financials, a lot of red in there. Specifically in the healthcare, you've got generic drugs, biotechs, healthcare all performing pretty well. Kind of a bounce back, or a, I guess, switch trade from the day before. CSX performed really well in the railroads. Actually, all the railroads performed pretty well yesterday. But what you're going to continue to kind of see between utilities and financials is the back and forth until the Feds start to raise rates. Once the Feds start to raise rates, my guess is, again, it's all a guess, but it's a pretty educated guess based on looking at historical trends. Once rates start to go up, the utilities will come down, and the financial stocks will drive up. So that is it for today, guys. Take care. If you have any questions, feel free to send me an email, chrism@campfinancial.net, and maybe that way I can start throwing in some questions from individuals as kind of a discussion leader here on the videos. So take care, and we will see you tomorrow.